Here is for your notes, okay, and I'll talk more about this in the books. The breakaway gaps, the inefficiency that shows up on your chart that does not get filled back in, if it's between a quadrant level like this and another quadrant, expect that when we are looking for lower prices, when it breaks lower, if it leaves a quadrant like that and breaks a little bit lower, this is many times going to act as a breakaway gap because it's in no man's land between a quadrant and another quadrant inside the narrative and bias that the market's moving one direction. And that's how you see a properly classified ICT breakaway gap. Okay. The same thing can be said for measuring gaps. So a halfway point, when there's a gap that is during a move, if it's between a quadrant of either an inefficiency, okay, or an actual gap by a wick, okay? So no matter how you slice it, if you're grading your price PD arrays as I teach, whether it be a candlestick wick or a inefficiency in price action where it's a body that's being measured, not the wick. Either way, if you're grading that price level or those price levels and you see a gap that appears between two quadrants, then it's chances are it's going to be a breakaway gap or a measuring gap. Okay. But the market breaks lower, trades down into that suspension block high here, which is the high of this volume imbalance. Hits it there perfectly, rallies back up, finds the low here of that old inefficiency here, which is a buy side imbalance, sell side inefficiency with the volume imbalance at the discount level, low end of it. Working off of a volume imbalance also that's not noted, rallies up. This portion of this SIBI, we can grade that because it's anchored right on top of a lower quadrant level, meaning the 75 level or lower quadrant at 99.054. That's this level here, which is 1/4 from the low of this buy side imbalance, sell side efficiency. Because the gap is laying over top of, and key point here, below inside the narrative that the market should deliver lower, and it's below this inefficiency, which we should expect that to be a breakaway gap. When another series of SIBIs form, this one, we look at it as staying open or we want to see it remain unfilled. Can it come up and trade into it a little bit? Sure. But we expect some measure from its halfway point to the high of it. That portion should likely stay open, unfilled. Here, this SIBI from this candlestick's low and this candlestick's high, that's denoted with these red trend line segments, we can grade that and the bodies are stopping right at the midpoint, which is exactly what you want to see when the market's bearish. It's showing you premium sensitivity. It's reacting to half of this inefficiencies range. Even though there's a little wick there, the wick didn't even touch the upper quadrant. The bodies are staying at the halfway point, indicating what? As I taught, this is heaviness. Algorithmically, it's indicating, tipping its hand to you, that the market will want to seek a deeper discount. What would that be? Below that low. And it trades down to the lower lower level of this volume imbalance, which is candlestick's close on this right here. Okay. And we have a volume imbalance there, trades up into before it gives up the ghost. Inversion fair value gap right here as well, trading at its consequent encroachment, halfway point, breaks, comes right back up into a volume imbalance, trades lower, lower quadrant, perfect delivery, and trades down to that volume imbalance on the daily chart right there. Moving on to euro dollar, just pretty much the opposite. We can see their sell side liquidity here. They tapped into that during New York open and kill zone, 7 o'clock to 10 o'clock in the morning Eastern time, always New York local time. We have the ICT model 2022, low, high, 62 to 79% retracement level. You can find that on your own charts here. But we have an inversion fair value gap. This SIBI changes its characteristic when we trade above it. We come back down in. The wicks are digging down, but we don't get to the low here. The bodies are staying close to what? Consequent encroachment. It rallies up, uses it as the discount sensitivity, and then rallies away. All these wicks converging around this level here at 1.15740. That's this old candlestick's low, which is being graded. Okay, why am I picking this one? Because it's lower than this one, and it's lower than that one. So it's the longest, lowest reaching when price was dropping down. And below that, we have this buy side imbalance, sell side inefficiency. And we trade into that right here, okay, which is not being shown in the chart because it's during Thursday's trading. Friday's trading had a higher low, that low being at the upper quadrant of this wick. Why am I using this wick? Because it's lower than this wick and it's lower than that wick. And this wick is lower than that one. In all of this price action in here, where's the lowest reaching wick? This one. It's pretty obvious, isn't it? Look at all of them. This one here. This one's being graded because it's lower than this one and it's lower than this one. And it dug into this inefficiency that's shaded in blue. So if it's going to trade down lower, we have to consider this wick before we even consider this low being taken out and trading to consequent encroachment of this buy side imbalance, sell side inefficiency. So Friday, we can see we're using this discount wick and the levels there. You can see them being used over here. So the low of that wick there, right on here, it launches from there, trades above the quadrant, lower quadrant, and then tears off. So this portion down here, that would be what? That would be a breakaway gap. This would be a standard buy side imbalance, sell side inefficiency, or BISI. You can grade this one, and you can get down here to the lower quadrant. The body's respecting that as well. We trade up into the upper quadrant at 1.16220 of this discount wick. Why am I looking at that? Because it was a discount array when we were trading lower, and now when we were below it, it's going to act as what? It's going to change its characteristic to a premium array. So if you're going to grade it like a gap, you have to have these levels in mind, and it trades up into that as well. You might want to take on your own study. I didn't do it here for you, but you want to take this high down to that low and duplicate that range and project it up, and you'll get pretty much this area in here. The buy side imbalance, sell side inefficiency here, almost complete closure. We have a inversion fair value gap that's not noted, and it's traded down to its low here, rallies up. Then the consequent encroachment, it accumulates once more, and then starts to send a little bit higher. We have a minor buy side liquidity there, so we'll see what we get on Sunday's trading, see if we can get any movement higher. All right, moving on to pound dollar. This wick is the lower of this one inside of this portion of price action. So this low, this area in here, that's the lowest one. Lowest reaching wick is this one here. So you're going to grade that one. Okay, so we're going to ignore this range here because the algorithm is going to see past this and go right back to this inefficiency. Why? Because this level of wicking is treated like a gap, and a gap is reused even after the gap has been filled, and it would be considered filled with this drop down. It went below that low. But the algorithm is not going to just toss the baby out with the bathwater. It's going to refer back to that reference point. So we cut through, looking through time here. And the question is coming up a lot. How long do I keep PD arrays graded on my charts? Well, if you remember how I first started teaching in 2016, the paid mentorship portion of lectures, I taught the IPTA data ranges, 20, 40, and 60. So you can go back as far as 60 days, and they're just as salient 60 days ago than they are just yesterday. So we have a high, low, higher high. Everybody knows that that is my bearish breaker. But what happens when the market is bullish and it trades above it? It's going to treat it as an inversion breaker. Every PD array has an inversion aspect. So we use the consequent encroachment, or mean threshold rather, of that last down candle, which is the bearish breaker. But now it's going to act as what? A bullish PD array. So you can see the body stopping dead on the midpoint, mean threshold there. And then we have the opening right at that same price. It rallies up. The next candlestick, we drop down to it once more. See, there's discount sensitivity there. Rallies. And then the candlestick opens right at the high of that candlestick's high. And then digs into it a little bit and then rallies aggressively, creating what? A breakaway gap, clearing this high. Now, when you see these types of things, you'll see Yahoo say, well, this is the fair value gap that I'm really interested in. And let me tell you something. If these form after you have a breakout of price action during a consolidation, I never want to see these traded back into. If it has the willingness to come back down into that and fill that in, that's not strength to me. Order flow, real order flow, algorithmic order flow, is when there's an inefficiency after discovery, which is leaving this range here, taking this high out. When we do this, we want to see price keep that open. If this stays open, as long as this remains open, we have a bullish order flow. We do not anticipate market coming back down and closing and then going higher. Because if it goes down and closes that in, I am not all that bullish then. Can it do it? Yes, it can. But it's more problematic if it does for continued price action higher. You want to see the indication that, yes, there was an explosive price action move higher. It created an inefficiency. But the market is so overzealous to move higher, it need not even concern itself with coming back down in here, offering a discount to people that would see what? Classic support, resistance, break, and retest. So the market trades up into the consequent encroachment level here of this wick, discount wick, at 1.33637, and you can see that level here. And you can do a measured move type thing here. The same range from this high down to that low, duplicate that and send it up here, and you'll pretty much get the bulk of where the bodies are converging right there.